Welcome to this session on the PCAOB's new auditing standard, AS 2310, the auditor's use of confirmation. This standard was adopted by the board in September of 2023 and replaces in its entirety AS 2310, the confirmation process. My name is Danny Verbeck. I'm an assistant in the Office of the Chief Auditor at the PCAOB and was part of the project team that worked on the new standard. I'm also joined by my colleague, Lisa Busidu, an associate in the Office of the Chief Auditor. Given the intent of this training is to provide an overview, we will not be discussing all aspects of the new standard. As a result, I encourage participants to read the adopting release for the new standard, PCAOB release number 2023-008, in order to gain a more complete understanding of the requirements. Before we get started, I'll state our standard disclaimer. The views expressed are offered in our capacity as staff of the PCAOB's Office of the Chief Auditor, but they are our own and do not necessarily reflect the views of the board as a whole, any individual board members, or other PCAOB staff. AS 2310 is an important standard for audit quality and investor protection, as the audit confirmation process touches nearly every audit. The interim standard on the confirmation process was initially written over 30 years ago and had minimal amendments since its adoption by the PCAOB in 2003. The new standard and related amendments are intended to enhance the PCAOB's requirements on the use of confirmation by auditors by describing principles-based requirements that apply to all methods of confirmation, including paper-based and electronic means of communications. In addition, the new standard is more expressly integrated with the PCAOB's risk assessment standards by incorporating certain risk-based considerations and emphasizing the auditor's responsibilities for obtaining relevant and reliable audit evidence through the confirmation process. A brief listing of all of the topics that we'll cover as part of today's session appears on the right of your screen. Before I go any further, I'd like to touch upon some important areas that the new standard intentionally does not address. Just like the old standard that is being replaced, the new standard does not prescribe the timing and extent of confirmation procedures. Said another way, AS 2310 did not amend other PCAOB standards regarding timing. By this, I mean when to send confirmation requests, or extent. By this, I mean how many items to be confirmed. The new standard does not amend AS 2315 audit sampling regarding planning, performing, and evaluating audit samples. Additionally, the new standard does not amend AS 2301, the auditor's responses to the risks of material misstatement. As with the existing standard, the extent of the auditor's confirmation procedures under the new standard will depend on the auditor's risk assessment and materiality. Before moving on to the core of today's session, I would also like to mention that the new standard and related amendments are effective for fiscal years ending on or after June 15th, 2025. This means that the new standard is already effective for some audit engagements currently underway. Throughout this training, we will say new AS 2310 or the new standard when discussing the standard that comes into effect for audits of fiscal years ending on or after June 15th, 2025. Likewise, we will say old AS 2310 or the old standard when referring to the version that is still effective for audits of fiscal years ending before June 15th, 2025. The new standard includes definitions for 8 terms in an appendix to the standard. The old standard does not include defined terms, although many of the concepts addressed by the newly defined terms do appear in the old standard. On this slide and next, we listed in alphabetical order terms that are defined by the new standard. I would like to highlight the second item in this list, the definition of the confirmation process. so that you can note that it comprises several fundamental steps that we will discuss individually in our presentation. The confirmation process is the process that involves selecting one or more items to be confirmed, sending a confirmation request directly to a confirming party, evaluating the information received, and addressing non-responses and incomplete responses to obtain audit evidence about one or more financial statement assertion. You may notice that this definition is agnostic to the method of confirmation. As previously mentioned, the new standard and related amendments are intended to enhance the PCAOB's requirements on the use of the confirmation by describing principles-based requirements that are designed to apply to all methods of confirmation. This includes long-standing methods, such as the use of paper-based confirmation requests and responses sent via regular mail, methods that involve electronic means of communications, such as the use of email or an intermediary to facilitate direct electronic transmission of confirmation requests and responses, and methods that may develop in the future. I also want to talk briefly about the definition of a non-response. Old AS 2310 indicates that when the auditor has not received replies to positive confirmation requests, the auditor should apply alternative procedures to the non-responses to obtain the evidence necessary to reduce audit risk to an acceptably low level. The new standard continues to require the auditor to perform alternative procedures in the event of a non-response. However, new AS 2310 also expands the definition of a non-response to include situations beyond the auditor not receiving a reply to a positive confirmation request. Those situations include a confirmation request being returned undelivered, the auditor not receiving a confirmation response to a positive confirmation request directly from the intended confirming party, the auditor receiving correspondence from the intended confirming party indicating that the confirming party is unable or unwilling to respond to the confirmation request, and the auditor receiving an oral response only. Now that we have discussed some of the new definitions, let's walk through the requirements of the new standard, starting with the auditor's responsibilities related to designing confirmation requests. The new standard does not prescribe a particular format for a confirmation request. For example, a confirmation request could specify the information to be confirmed or provide a blank response form. The auditor determines the format of a confirmation request to increase the likelihood that the request is received and clearly understood by the confirming party, taking into consideration, among other things, the facts and circumstances of the company and the confirming party. On the next few slides, I'll walk through the provisions in the new standard related to designing confirmation requests. You will see a green box in the top right corner of our discussion slides that indicates the paragraphs of the new standard that we will be discussing. Under the new standard, when designing the confirmation request, the auditor should identify the information related to the relevant assertions that the auditor plans to verify with the confirming parties or obtain from the confirming parties. Such information could include transaction amounts, transaction dates, significant terms of transactions, and balances due to or from the confirming party as of a specific date. As you may have noticed on the earlier slides showing the definitions in the new standard, a positive confirmation request is defined as a confirmation request in which the auditor requests a confirmation response. The note to paragraph 8 of the new standard provides that there are different forms of positive confirmation requests. Some forms of positive confirmation requests ask the confirming party to indicate whether the confirming party agrees with the information stated on the request. Other forms of positive confirmation requests, referred to as blank forms, do not state the amount or other information to be confirmed, but request that the confirming party fill in the balance or furnish other information. The note to paragraph 8 also explains that responding to blank form confirmation requests generally requires additional effort, which might lower the response rates and lead auditors to perform alternative procedures for those non-response items. Despite the possibility of lower response rates, responses to blank form confirmation requests may provide more reliable audit evidence than responses to confirmation requests using pre-filled forms. The new standard requires that the auditor direct confirmation requests to confirming parties, individuals, or organizations who are knowledgeable about the information to be confirmed and determine that the confirmation requests are properly addressed. The point of this provision is that the confirmation request reach that knowledgeable third party, which can be either an individual or organization, who then provides the requested information back to the auditor. Requiring auditors to determine that confirmation requests are appropriately addressed is important to the effectiveness of the confirmation process. The new standard does not prescribe the nature or extent of procedures to be performed by the auditor when making the determination that the confirmation requests are properly addressed. Rather, the auditor can tailor the procedures to the facts and circumstances of the audit. With that said, today I'll discuss some procedures that auditors may perform in practice as part of determining that confirmation requests are properly addressed. First, some auditors compare some or all the confirming party addresses, which are typically provided by the company, to physical addresses or email domains included on the confirming party's website. Second, when an auditor uses an intermediary to facilitate direct electronic transmission of confirmation requests and responses, which we will discuss in greater detail later on in the training, the auditor may determine that relevant controls at the intermediary include controls related to validating the addresses of confirming parties. In such a situation, the auditor may be able to determine that audit procedures performed in accordance with the new standard to evaluate the implications of using an intermediary are sufficient to determine that confirmation requests are properly addressed. When designing confirmation requests, an auditor may become aware of information about a potential confirming party's motivation, ability, or willingness to respond, or about the potential confirming party's objectivity and freedom from bias with respect to the audited entity. Because this type of information can affect the reliability of audit evidence provided by the confirming party to the auditor, the new standard requires that the auditor consider this information, including its source, in selecting the confirming parties. The new standard also notes that such information may indicate that a potential confirming party has incentives or pressures to provide responses that are inaccurate or misleading. The auditor should consider this information when determining if a potential confirming party would provide relevant and reliable audit evidence in response to a confirmation request. For example, restrictions on access to a potential confirming party may cause the auditor to identify and send a confirmation request to a different confirming party, and raise questions about the reliability of audit evidence that the auditor subsequently obtains from the other confirming party. The new standard addresses the situation where the auditor is unable to identify a confirming party for a selected item who would provide relevant and reliable audit evidence in response to a confirmation request. In such circumstances, the auditor is required to perform alternative procedures for that selected item. Earlier, we discussed positive confirmation requests. Now we'll spend a little time on negative confirmation requests. As a refresher, a positive confirmation request is a confirmation request in which the auditor requests a confirmation response. With a negative confirmation request, the auditor requests that the confirming party respond only if they disagree with the information provided in the confirmation request. The auditor generally obtains significantly less audit evidence when using negative confirmation requests than when using positive confirmation requests. This is because the auditor typically does not receive from the confirming party a confirmation response to a negative confirmation request unless the confirming party disagrees with the information provided in the request. Confirming party might not respond to a negative confirmation request because it did not receive or open the request, or alternatively, the confirming party might have read the request and agreed with the information included therein. Because of the limited evidence provided when using negative confirmation requests, the new standard provides that the use of negative confirmation requests alone does not provide sufficient appropriate audit evidence for addressing the risk of material misstatement to a financial statement assertion. This is a change from old AS 2310, where the auditor may use negative confirmation requests where certain criteria are present and should consider performing other substantive procedures to supplement their use. So, when might an auditor still elect to use negative confirmation requests in combination with the performance of other substantive audit procedures? The new standard provides examples of situations in which the use of negative confirmation requests in combination with the performance of other substantive audit procedures may provide sufficient appropriate audit evidence. The examples of such situations included in the new standard are as follows. The auditor has assessed the risk of material misstatement for the relevant assertions as low and obtained sufficient appropriate audit evidence regarding the design and operating effectiveness of controls, the population of items within the account balance or class of transactions for which the auditor considers sending negative confirmation requests is composed of many small, homogeneous items, and lastly, the auditor expects a low exception rate in response to negative confirmation requests and has a reasonable basis for this expectation. I wanted to emphasize again that these are examples in the new standard. However, even if one or more of these example situations apply, the new standard is clear that using negative confirmations alone does not provide sufficient appropriate audit evidence. The new standard does not include examples of other substantive procedures that the auditor may use in conjunction with negative confirmation requests. Determining the necessary nature, timing, and extent of audit procedures that provide sufficient appropriate audit evidence depends on the facts and circumstances of each audit. Now we will discuss the auditor's responsibilities under the new standard related to maintaining control over the confirmation process. Before getting into the details, it may help to mention upfront what has and has not changed from the old standard to the new standard. First, the requirement for the auditor to maintain control is not new. That requirement is in the old standard and the new standard. One thing that is new, however, is that the new standard specifically acknowledges and addresses the use of intermediaries in the confirmation process. We will go over in this section what the auditor needs to do to demonstrate they are maintaining control, including when using an intermediary is being used. The new standard requires that the auditor maintain control over the confirmation process to minimize the likelihood that information exchanged between the auditor and the confirming party is intercepted or altered. This is because the reliability of audit evidence provided by confirmation depends in large part on the auditor's ability to control the integrity of confirmation requests and responses. The new standard specifies the auditor's responsibilities regarding certain aspects of maintaining control. In order to maintain control over the confirmation process, the new standard requires that the auditor select the items to be confirmed, send the confirmation requests, and receive the confirmation responses. For instance, the auditor should not delegate those activities to another party, such as an internal auditor working in a direct assistance capacity. The new standard does permit auditors to use internal auditors to provide direct assistance in other aspects of the confirmation process in accordance with AS 2605, consideration of the internal audit function. These other aspects could include, for example, researching differences in confirmation responses. Additionally, to maintain control over the confirmation process, the new standard also requires that the auditor send the confirmation request directly to the confirming party and obtain the confirmation response directly from the confirming party. Now, we'll take some time to talk about the use of intermediaries in the confirmation process. The new standard recognizes that the use of intermediaries to facilitate the confirmation process has become commonplace. For example, certain financial institutions and other companies have adopted the policy of responding to external auditor confirmation requests only through a specified confirmation intermediary. A confirmation intermediary may be engaged by the auditor or by the confirming party to facilitate the direct transmission of information between the auditor and the confirming party. However, the use of an intermediary does not relieve the auditor of the responsibility to maintain control over the confirmation process. Because an intermediary's involvement could affect the integrity of information transmitted between the confirming party and the auditor, the new standard requires that the auditor evaluate the implications of using an intermediary on the reliability of confirmation requests and responses. When evaluating the implications of using an intermediary, Appendix B of the new standard provides that the auditor should obtain an understanding of the intermediary's controls that address the risk of interception and alteration of the confirmation requests and responses, determine whether the controls used by the intermediary to address the risk of interception and alteration are designed and operating effectively, and assess the relationship of the intermediary with the company, specifically whether circumstances exist that give the company the ability to override the intermediary's controls that address the risk of interception and alteration of the confirmation requests and responses. The new standard doesn't specify how the auditor should perform these procedures. Rather, it allows auditors to customize their approach based on the facts and circumstances of the audit, engagement, and the audit firm. The new standard does provide in a note to paragraph B1 that if the auditor performs procedures to determine that the controls used by the intermediary to address the risk of interception and alteration are designed and operating effectively at an interim date, the auditor should evaluate whether the results of the procedures can be used during the period in which the auditor uses the intermediary, or whether additional procedures need to be performed to update the results. The standard also describes the circumstances when an intermediary should not be used by the auditor. Such circumstances are if the auditor determines that 1. The intermediary has not implemented controls that are designed and operating effectively to address the risk of interception and alteration of the confirmation requests and confirmation responses, and the auditor can't address such risk by performing other audit procedures beyond inquiry, or 2. Circumstances exist that give the company the ability to override the intermediary's controls. When the auditor determines that they cannot use the intermediary, the auditor should send confirmation requests for the selected items without the use of an intermediary, or, if unable to do so, perform alternative procedures in accordance with Appendix C. We will cover the alternative procedures in Appendix C shortly. With that said, I'll now hand over the remainder of this training to my colleague, Lisa Busidu.
We'll now walk through the requirements in the new standard relating to evaluating confirmation responses and confirmation exceptions, and addressing non-responses and incomplete responses. A confirmation response is defined in the new standard as information obtained as a direct written communication, in paper or electronic form, to the auditor from the confirming party in response to a confirmation request. the auditor is required to evaluate the reliability of confirmation responses. So what does that entail? Well, when performing the evaluation of the reliability of a confirmation response, the auditor takes into account information about events, conditions, or other information that the auditor becomes aware of that contradicts the information used when selecting the confirming party or indicates that the confirmation request or confirmation response may have been intercepted or altered. If the auditor is unable to determine that the confirmation response is reliable, the auditor would perform alternative procedures in accordance with Appendix C. The new standard provides examples of information that indicates that a confirmation response may have been intercepted or altered. Those examples include the confirmation response comes from a physical or electronic address other than the address on the confirmation request. The confirmation response does not include a signature of the confirming party or otherwise identify the confirming party. Or the confirmation response does not include a copy of the original confirmation request, email chain, or any other information indicating that the confirming party is responding to the auditor's confirmation request. If indicators of interception or alteration are present, it's important for the auditor to address them. When the auditor follows up on a particular indicator, an auditor may determine that the confirmation requests and responses have not been intercepted or altered. For example, an auditor could verify that a difference in the confirming party's email address between the confirmation request and the confirmation response occurred because the confirming party responds to confirmation requests from a central email address. Under PCAOB standards, the auditor would document the procedures performed in response to such information. Next, we'll discuss confirmation exceptions, non-responses, and incomplete responses. A confirmation exception is defined in the new standard as information in a confirmation response that differs from the information the auditor obtained from the company. The new standard requires that the auditor evaluate confirmation exceptions and determine whether confirmation exceptions, individually or in the aggregate, indicate a misstatement that should be evaluated in accordance with AS 2810, evaluating audit results, a deficiency in the company's internal control over financial reporting, or both. The new standard also includes a note which states that determining that a confirmation exception does not represent a misstatement that should be evaluated in accordance with AS 2810 generally involves examining external information, which may include information that the company receives from knowledgeable external sources. The note uses the word generally to acknowledge that in some circumstances, examining external audit evidence may not be necessary. For example, an auditor may have included an incorrect figure in the confirmation request and later determined that the amount confirmed by the confirming party agrees to the amount in the company's general ledger. Determining that such a confirmation exception does not represent a misstatement to be evaluated in accordance with AS 2810 would not require examining external information in such a situation. The new standard also describes the auditor's responsibilities related to addressing non-responses and incomplete responses. When the auditor does not receive a response to a positive confirmation request, the auditor is required to follow up with the confirming party. The new standard does not prescribe a form of the auditor's follow-up. For example, following up using the same form of communication as in the original confirmation request, for example, another email or direct electronic transmission facilitated by an intermediary, would be appropriate under the new standard. In the case of an electronic confirmation request, a follow-up request could be in the form of sending another reminder or an automated reminder. If a confirmation response is returned by the confirming party to anyone other than the auditor should contact the confirming party and request that the response be resent directly to the auditor. If the auditor does not subsequently receive a response from the intended confirming party, the auditor should treat the situation as a non-response. Finally, when the new standard provides that in the case of a non-response or an incomplete response, the auditor should perform alternative procedures in accordance with Appendix C. In some circumstances, an auditor selects an item for confirmation and is unable to obtain relevant and reliable audit evidence in respect of that item. In some such circumstances, which are described in the new standard, the auditor is required to perform alternative procedures. We've actually already highlighted the various circumstances in which the auditor should perform alternative procedures. Therefore, this slide just presents these circumstances in a single location. The auditor is required to perform alternative procedures for a selected item when the auditor is unable to identify a confirming party who would provide relevant and reliable audit evidence in response to a confirmation request, when the auditor is unable to determine that the confirmation response is reliable, when the auditor does not receive a response to a positive confirmation request, i.e. a non-response, or the auditor receives an incomplete response, or when the auditor is unable to use an intermediary and is unable to send a confirmation request without using that intermediary. In addition, as a reminder to auditors that the assessment of risks of material misstatement, including fraud risks, should continue throughout the audit, paragraph C1 of the new standard states that when the auditor is unable to obtain relevant and reliable audit evidence about the selected item through confirmation, the auditor should evaluate the implications for the auditor's assessment of the relevant risks of material misstatement, including fraud risks. Appendix C also provides examples of alternative procedures that individually or in combination may provide relevant and reliable audit evidence for the selected item. There are example alternative procedures noted for items of cash, accounts receivable, terms of a transaction or agreement, and accounts payable. Lastly, as with the existing standard, the new standard states that performing alternative procedures for items for which the auditor was not able to complete the audit procedures may not be necessary if these items, in the aggregate, and when added to the sum of all other uncorrected misstatements in relation to the account, would not change the outcome of the auditor's evaluation performed in accordance with paragraph 17 of AS 2810. In this final section, we'll talk about confirming cash, accounts receivable, and terms of certain transactions. In addition, there is a new provision about the auditor communicating with the audit committee in certain situations. For both cash and accounts receivable, when these are significant accounts, there is a presumption in the new standard that the auditor should obtain audit evidence from a knowledgeable external source, either by performing confirmation procedures or using other means to obtain audit evidence by directly accessing information maintained by a knowledgeable external source. The requirement for the auditor to confirm cash and cash equivalents held by third parties, which I'll simply refer to herein as cash, is a new requirement. While confirming cash has typically been done in practice by auditors, there was not a specific requirement to do so in our auditing standards before. The standard carries forward an existing requirement to confirm accounts receivable. Accounts receivable in the new standard include receivables that arise from the transfer of goods or services to a customer or a financial institution's loans. The adopting release for the new standard describes that a knowledgeable external source generally is a third party who the auditor believes has knowledge of the information that may be used as audit evidence. Regarding directly accessing information maintained by a knowledgeable external source, the new standard recognizes that if the auditor is able to perform other procedures that allow the auditor to obtain this evidence directly, the auditor may perform those procedures instead of sending a confirmation request about that item. The adopting release that accompanies the new standard discusses that audit evidence obtained by the auditor by accessing a third party's information directly can be at least as persuasive as audit evidence obtained through confirmation procedures, because the auditor is able to observe firsthand the information providing such evidence. Now we'll step through how the auditor would perform the required procedures for cash and accounts receivable. In this scenario, a company under audit has cash balances deposited at a financial institution. And let's assume the auditor has determined cash to be a significant account. Let's look at a few examples of substantive audit procedures that could satisfy the requirements of paragraph 24. First example, the auditor sends a confirmation request and receives a response directly from the financial institution. The auditor may do this by email or by a physical mailed request. Second example, the financial institution instructs all auditors to send confirmation requests using a confirmation intermediary. Let's assume the auditor has evaluated the implications of using that intermediary on the reliability of the confirmation process and was satisfied with the results of those procedures. The auditor then uses this confirmation intermediary to facilitate direct electronic transmission of confirmation requests and responses. Third example, the auditor obtains read-only access to information maintained by the financial institution about the company's cash balances directly online through a secure website using credentials furnished to the auditor by the financial institution. Now we'll turn the discussion to accounts receivable. The new standard addresses situations where, for accounts receivable, the auditor determines it is not feasible to obtain audit evidence through performing confirmation procedures or by otherwise obtaining relevant and reliable audit evidence by directly accessing information maintained by a knowledgeable external source. This determination is based on the auditor's experience, such as prior year's audit experience with the company, or experience with similar engagements where the auditor didn't receive confirmation responses, and the auditor expects their expectation of similar results if confirmation requests are sent again. We do understand there may be situations involving a history of low response rates to confirmation requests, for example, in certain industries such as healthcare, utilities, or where customers have been advised by a government agency to avoid providing personal or financial information in response to an unexpected request. We also understand that companies in other industries, for example, some large retailers or defense and aerospace companies that contract with a federal government, do not, as a matter of policy, respond to auditor confirmation requests. The auditor's determination about the feasibility of confirmation procedures should be based on the available facts and circumstances at the time. The new standard reminds the auditor that they should document any such determination in accordance with Auditing Standard AS 1215, Audit Documentation. Once the auditor determines that confirmation of accounts receivable is not feasible, Paragraph 25 further directs the auditor to obtain external information indirectly by performing other substantive procedures, including tests of details. I'll discuss this next. The adopting release for the new standard explains that performing substantive analytical procedures would not be sufficient to overcome the presumption to confirm. So, let's talk about the kinds of substantive audit procedures that could satisfy the standard's requirement to obtain external information indirectly. The auditor designs other substantive tests of details, which include obtaining external information indirectly. For accounts receivable, the auditor may be able to satisfy this requirement by obtaining information that's in the company's possession that the company received from one or more knowledgeable external sources. Hence, the auditor obtains this external information indirectly from the company. Example procedures include examination of subsequent cash receipts, examination of shipping documents from third-party carriers, and examination of customer purchase orders or signed contracts. The nature Timing and extent of procedures will be subject to specific facts and circumstances. And note that the auditor may determine it's necessary to perform more than one procedure to obtain the necessary level of evidence. For significant risks of material misstatement associated with cash or accounts receivable, the auditor is required to communicate with the audit committee when the auditor did not perform confirmation procedures or otherwise obtain audit evidence by directly accessing information maintained by a knowledgeable external source. This targeted requirement is consistent with the existing obligations of auditors under PCAOB standards to communicate to the audit committee an overview of the overall audit strategy and to discuss with the audit committee the significant risks of material misstatement identified during the auditor's risk assessment procedures. There are two other provisions in the new standard I'd like to briefly touch on. Both of these relate to information or transactions where the auditor should consider using confirmation. The first consideration relates to other financial relationships that the company may have. In addition to obtaining audit evidence from a knowledgeable external source regarding cash, the new standard requires that the auditor should consider sending confirmation requests to that source about other financial relationships with the company based on the assessed risk of material misstatement. Examples of other financial relationships are lines of credit, other indebtedness, compensating balance arrangements, or contingent liabilities, including guarantees. The auditor would determine whether to send a confirmation request depending on the assessed risk of material misstatement relating to the other financial relationships. Under PCAOB standards, the higher the risk, the more audit evidence is needed. The second consideration relates to certain transactions the company has entered into. For significant risks of material misstatement associated with either a complex transaction or a significant unusual transaction, the auditor should consider confirming those terms of the transaction that are associated with the significant risk of material misstatement, including a fraud risk. Examples of such terms may include terms relating to oral side agreements, or undisclosed written or oral side agreements where the auditor has reason to believe that such agreements exist, bill and hold transactions, and supplier discounts or concessions. This concludes today's presentation, providing an overview of the requirements of AS 2310, the auditor's use of confirmation. For more information on the new standard and the related amendments, please see the PCAOB adopting release from September of 2023, PCAOB release number 2023-008, and visit the confirmation implementation page on the PCAOB's website. Thank you for listening to this presentation.